Okay, very good morning. Tuesday the 25th of April. Let's get the briefing underway. And just looking at the charts this morning, you can see that there's still a prevailing theme of moderate risk on sentiment continuing from the digestion of the French election at the weekend. Obviously Macron Le Pen seen as the most, or one of the most market friendly scenarios, and that's carrying through following what was an exceptionally strong day in equities yesterday. In terms of the Stock 600, so in terms of trying to encompass the broader feeling and performance across the major continent of Europe, it hit its highest level since mid-August 2015, while the CAC 40, which is the local stock index in France, rallied just over 4%. All the big banks, as per the open price yesterday, finished around a similar margin, about 10% for much of the bellwether names, so Credit Ag, SocGen, BNP and so on and so forth. Obviously yesterday as well we hit fresh record highs in the DAX. If we look slightly longer dated here, well, I've already got it marked up from yesterday what we were looking at, and that was that previous high point that we had back in really similar point of the year in 2015. It was April at the time. We previously tested that earlier in the month before dropping back down to around the 12,000 level, before now we've breached that to trade at the best levels ever. Obviously that other circle that's highlighted here being the US election and the kind of Trump trade that lifted global equity markets. So Europe, the DAX we're looking at here, following in sympathy with the US equity move, that kind of powerful upside move we've seen since then. And we'll talk about Trump a little more shortly, because tomorrow is quite a big day for him as he looks to unveil some more details on this much needed and much talked about by himself, the corporate tax reform. But elsewhere the dollar is pretty flat overall, but both pairs are seen marginally higher. The euro again making some headway on the upside. We got above the high point of yesterday morning, which is around at 109.06.5. So let's just have a look. Obviously we had the sharp gap up from reopening of electronic trade given that first round election result. So above here you have R1 at 109.32. That pretty much in line with around the original gap up high that we had Sunday evening. So probably be keeping an eye on that level, 109.28.5, R1 just above it, just to keep an eye on top side range of the last kind of 24 hours or so. Likewise though, cable also positive. We've been monitoring various polls, still indicative of the Conservatives' kind of runaway huge majority, multi-year high going into this June 8th election. At this point, obviously a lot of the focus has been short-term turns away from that situation given the focus on France, but we've just managed to get above pivot as kind of Europe stepped into the market, breached it, and then came back down to the level before then. We've seen a bit of mixed direction more recently, but it seems to have found some support around that 128.17. Upside of that range in terms of the day, when we're looking at it more broadly, you can see you got R1 at 28.45, but then you're probably going back to, well, you can see here after that really strong move we had after she announced the call for a snap election, we've kind of been pretty locked in a consolidation since that move, and obviously it's held on to a large portion of those gains, but I'd really be looking at that 127.76 low to R2 today at 128.80 as defining that kind of trend. In the interim period, you've kind of got those rough levels kind of before that at 28.55, but certainly the broader range I would say is what you're looking at there from the last, really since the 18th. So it's been in play for about a week or so, pivot being on the intraday levels in the middle of that range. Likewise then, with the moderate risk on tone, gold seen a little lower. We're down $4.50. Just while we're on gold, actually, there is a report out from Goldman Sachs this morning who are expecting gold to sell off. They expect gold to remain under pressure in the near term. Goldman Sachs holding its 3-month target. They're looking at $1,200 per ounce. They're looking at a couple of things here. Obviously, worst case averted in terms of France. They're looking at expecting unveiling of Trump's tax policies tomorrow. They're looking at US economists at the bank do not expect a US government shutdown. They're looking at possible US rate hikes and faster reduction of quantitative easing, following the increased expectations of US tax reforms and solid US global economic growth. So, I'd like to point these things out because as much as there's we talk about gold being more bullish given some of the recent geopolitics that we've had, Syria and North Korea, which we'll look at also shortly, certainly hasn't gone away on the latter case. And then also, this French situation, although I do agree Macron will likely become president, I wouldn't want to be wholly complacent on the issue. And personally, I still think putting a lot of faith in Trump delivering tomorrow, I think is a little bit far-stretched, and that he's actually going to be able to achieve too much, particularly soon or in immediate fashion. So I thought I'd point it out, though, because we've had pretty mixed calls about fortunes for gold. I can't remember the bank. There was another bank we were talking about a few days ago was looking at 1,400. Goldman's looking at 1,200. So there you go. That's what makes a market, those types of views. Quick look elsewhere, though. One of the other things as well, just to have a look at before we get into the crux of the news, is the Canadian dollar has seen a pretty decent move from overnight. This would be the overnight move here. If I just circle it for you. Bit of a pop higher in dollar CAD, indicative of CAD weakness. Now, there is a report that came out, and it was really commentary out of the US administration. So the Trump administration will impose new tariffs on imports of Canadian softwood lumber after concluding that Canada subsidizes the industry in a way that hurts the US. So if Trump just wasn't content enough to offend much of the Far East, he's now decided to turn it not just south of the border but north. So not just the Mexicans now are being targeted, it's the Canadians, and that obviously has a detrimental effect to what would be a particular large export for that country, and as such you've had a bit of repricing here of expectations about what that might mean for the Canadian economy. And dollar CAD, even as I'm speaking, is currently sat at session highs. So that might be worth watching, particularly when the US start to come in, whether or not, I think this comment came late their session anyway, so they probably would have already reacted largely to the news. But interesting to see how powerful, really, comments from Trump and his team can have on the actual underlying market prices quite quickly. So just something to keep an eye on. The CAD certainly one of the weaker currencies to get the markets underway this morning. Okay, let's go to the news then. A couple things to be aware of. And Macron's been in the news a lot this morning. Philippe, our inside Frenchman, has been scouring the French press this morning, and he's getting quite a bit of scrutiny about where he went for dinner last night. I'm not sure if you guys have read about this, but a long story short, basically after the result, he took his campaign team out for dinner. The only problem is he took them out for dinner in a fairly nice restaurant, and this, for the public in France, has connotations of Sarkozy. Sarkozy was very famous for, when he was in power, he would take his team out on the Champs-Élysées to multi-Michelin star restaurants and spend about 200 euros a head on his employees. People from the broader public, obviously there was a massive backlash about that, misspent public funds and so on. And so Macron now is this is small signs of someone who is an inexperienced politician. It's almost as if he is celebrating his victory when the battle isn't even won yet. And so definitely the press has jumped on this in France very heavily. They've termed him in France the child king. I think it's a little bit far stretched when you look at the menu of what he was eating to call him a child king. But let me share it with you and let you make your own decision. This was the actual menu that I've managed to locate from where he had dinner last night. And you tell me in the chat room, is this too expensive for someone as a broader public? So let's say, you know, Paris, like London, is just one metropolitan city. What about other places in like the other parts of France? Would they look at this menu with distaste, thinking that this is a guy that we have nothing in common with? They're calling him a bobo in the press, I think is the term in France, which basically is he's a socialite. He's coming on the back of, obviously he was a former investment banker and so on. So I'm not sure what you guys think. 50 euros a head, 28 euros a main course. I would say that's, you know, he's made a bit of a mistake here. And then his team being questioned by the press and then responding, what do you expect? Do you think we would go to McDonald's? That's not going to go down particularly well in a political campaign, in my opinion. Correct me if I'm wrong. But what does this mean? Well, who's jumped on this news the most in France? There is one person in particular, Marine Le Pen. She is absolutely loving life this morning, because this absolutely plays into her hands. Now, we've made quite a big deal, and the market certainly has reacted in a way where it views this second round on the 7th of May as pretty much a foregone conclusion. We've talked about the fact that the margin of error of the Brexit poll, which was the biggest shock in recent political events, was about 6.3 percentage points. She needs to overcome about 20 percentage points. And so most people would say that given the shift of balance, given the fact that Francois Fillon has issued the call or the rally to his voting public to back Macron, we've had the same from the socialist candidate Hamon as well. Only Mélenchon, I think, hasn't. But those party officials, it's not just a foregone conclusion, because we still have 2 weeks to go for the public to decide. Another very interesting thing that Le Pen did last night, which I'm sure you probably saw the news, was Le Pen has stepped down temporarily from the National Front. And I think that this, again, is a masterclass of someone who's a much more experienced political campaigner. It makes complete sense to me that you step down, you say that you want to focus on the presidential bid, you want your party to just do their own job. At the same time then, what you're doing is you're distancing yourself and your name from far right. You're trying to almost bend people's thinking in that, and she has said herself that now she wants to be a president for all people. What's the first thing you do? Drop the name tag of far right, and then all of a sudden you're almost, you know, reborn, if you like, only to then, I'm sure, go back to the party afterwards. So a couple of moving pieces here, and I would definitely think that over the course of the next 2 weeks, this is definitely going to be a fluid thing, and I would expect much more of this type of news to come, where they'll be trying to dig the dirt on each other. I also believe that there's another one-on-one televised debate, and that will, of course, be extremely interesting. So instead of a multi-dimensional board where they're all having their say, this is just going to be one against another. So definitely the French situation is ongoing. This is what I've got a summary here of the latest polls. So IFOP, Opinionway, Ipsos, Harris. These are all taken in the last day, and essentially the net result is, on average, the second round gap is about 20% or more. So it's still a phenomenally large gap, but I think Macron now has probably learnt his lesson from what's happened yesterday and in the press this morning. I would imagine now they'll wrap him up in cotton wool and he will not be allowed to do a hell of a lot until the 7th of May, which would be the wise decision if you were part of his team. So we shall see. Other news to be, or that's on the agenda: US North Korea flex military muscles as tensions remain high. North Korea conducts its largest ever live fire drill, according to Yonhap. This all comes as what you can see here is the nuclear-powered USS Michigan arriving in a South Korean port. So, you know, this all marks, timing-wise, North Korea, in terms of Tuesday, today, it's their 85th anniversary of its army. And they've celebrated that with their largest ever military firing exercise. At the same time, the US has put in place one of their 4 Ohio-class guided missile submarines capable of launching cruiser missiles, and it's currently sitting in the ports in South Korea. So I had a conversation about this with the guys in stage 2 of the course on the career program yesterday, and although this sounds like, it almost sounds like a script in a Hollywood movie, but in reality, whether this comes down to actual physical confrontation is extremely unlikely. You know, this type of pattern of behavior is actually fairly common in this particular region. The only difference is you are dealing now with a new president, and you're dealing with a president who was pretty strong-handed in response and timely with the way that he dealt with the Syrian airstrikes. So as such, there is a slightly maybe more sense of uncertainty about how this situation might in the end be resolved. But if you think about it, someone like Trump now making a U-turn and not calling China a currency manipulator is almost lending them a hand to then say, well, if we say this, then you need to go and deal with the North Korean situation. At the same time, we'll also park a missile-capable nuclear submarine in South Korea to make sure that we are sending a strong signal ourselves that we're willing to take care of business should we need to. The important thing here is highly unlikely that they would ever need to. This is just a standoff. Now, in terms of Kim Jong-un's big nuclear push, this is a couple of interesting graphics just to put it into some context of what we're looking at. And this is where North Korean missiles could, estimated, say that they could potentially hit. So this isn't to make you nervous. This is just to put it in some perspective. So obviously Tokyo, given where the land is situated, the most closest, talking about 1,500 kilometers, that would be a medium range missile. That would be within in that kind of space. If you're going out to Washington DC, this is what the Koreans say is currently in development, i.e. firing a missile that had the capability to travel in excess of 10,000 kilometers in order to hit a target which, in terms of geography, would then encompass Washington DC. So this is the type of intercontinental range. When we go beyond that, we start getting up even further to 15,000. Now, one of the things that a lot of people will look out for when it comes to missile tests in North Korea is what they term as shock waves from whether or not that they've done something. You can tell by their reaction just in movement, if you like, the sonic boom that comes from such an impact. And what you can see here is from 2006, 09, 2013, 2016, twice in Jan and September, the tests in terms of estimated yield in kilotons is getting larger and larger and larger from Korea, which obviously is a worrying pattern. But again, this is more to do with timings wise, the 85th year anniversary or celebration for them of their military. This is all quite common in these particular kind of seasonalities, if you like, when they tend to show a sign of military strength. Overall though, the market is relatively unfazed by this for those aforementioned reasons. And so unless that you get something where there is confrontation of naval ships, let's say, or a missile was to drop in disputed waters on the other side of a border, then this situation could start to escalate once more. Okay, going back to the man himself, Donald Trump. This is the big one that people will be looking at. Really, it's one of the bigger macro themes for this week. That's because the Trump administration is seeking a dramatic reduction in the rate of corporation tax to 15%, as the president seeks to accelerate growth by easing burdens on US businesses. So again, the timing is always key. As we said, we got the threat of a potential government shutdown at the end of the week. You've also got his first 100 days in office marked on Saturday. He definitely wants to get this under his belt, or at least on the table for discussion before that time, I would imagine. And so now we have a number. This is a similar number to what has been circulated before, but this is kind of going to be the benchmark now for what the market is expecting. So when you start to hear the rumour mill pick up, possibly later this afternoon or tomorrow, when you hear murmuring on Capitol Hill in Washington, anything shy of 15, so if it starts being talked about at 17, 18 and so on, is going to be a disappointment comparative to what the noises are that are coming out from the Trump administration. We've talked about this a lot, and how, you know, his future, or more importantly, the valuation of certain assets, in particular the equity market, is really defined by him delivering on some of these bellwether or keynote policies. And one of the things here that I saw from Deutsche Bank this morning is about how the market, or the Trump trade, has fizzled or even reversed course in recent weeks. And some quite interesting things that we're looking at here is confidence in a reflation trade has waned, i.e. US break-even rates, which is essentially the measurement of what they're looking at in forward-looking inflation expectations, has started to decrease as we've really gone through March, late March and into this mid-part of April. Mexican peso depreciation has now fully reversed. So remember, in the US election, the peso was taking an absolute hammering at the time on this threat of a wall being built, you're going to pay for it, so on and so forth. Obviously that hasn't happened, and the Mexican peso is exactly back pretty much to the same point it was, and reversed all of its entire weakness seen since November. You know, so again, unwinding of that initial expectation of what it could have potentially have meant for Mexico. Looking at what Deutsche Bank is saying, after US elections, several trends took hold in markets on optimism about Trump's policy agenda. Government bond yields and inflation expectation rose, equities rallied, the dollar strengthened. Some trends began to reverse though in early 2017, i.e. the strong dollar has obviously gone away, large part in step with talking down or manipulating the currency, if you like, from Trump himself. Others fizzled more recently on worries about the policy shift could disappoint. So inflation expectations are now tailing off somewhat. Bond yields have fallen to year lows. Equity rally has stalled. You know, we've certainly not gone into any type of corrective mode, but the bid tone that was very much in play for a number of months has started to fade. And so, although other events also attributed to reversal of Trump trends, rising French election risk, well actually that's probably majority of that has gone away. Markets perceived the March Fed meeting as dovish. You remember the dot plot projections were indicative of a slower, more gradual approach in the years on out from 2018-19 in the long run. And so certainly there's a lot riding on Trump delivering, particularly for the equity market, one would think. Okay, quick summary on the other headlines. Don't forget, there's something like circa 195 or so S&P 500 companies reporting this week. There's also something like 130 or so from Europe. SAP has come out this morning. They're one of the bigger German firms. Their profits declined from a year ago, but the company said its soaring growth in new cloud bookings picked up momentum. They reported Tuesday that profit after tax fell 7% from a year ago. However, top-line growth was strong as they shifted on-premise services to cloud-based offerings. Their shares, though, were down about 1.5% at the open. So although you've had a pretty decent recovery in the futures in the DAX, at the initial, there's a very small gap lower. We recovered that almost instantaneously, and then we've just drifted off the highs. So definitely, if you're stock trading DAX, Euro stocks, you need to be aware of these pre-market earnings, because we are now into the full flow of earnings season as well. Okay, quick look at the calendar for today. It is relatively quiet, particularly for the morning. Public sector net borrowing from the UK very rarely has much of an impact for sterling currency. And into the afternoon, we do have the likes of Richmond Fed manufacturing, new home sales, and the Conference Board's consumer confidence reading. The latter might be interesting just to see, given the fact that it's been tracking up at very high levels, as to whether that's being maintained. How does the consumer feel about Trump and his ability to deliver at this point? So far, it's been so good in terms of how their confidence has held up. So overall, fairly quiet here. The data, I don't think is going to have too much of a great impact on market direction. So generally speaking, then I'd be looking over the charts sensibly for good technical based entries based upon a directional bias of still some moderate risk on mode on the back of still digestions of the French situation. As I'm speaking, I can see the US 10-year just trying to make a little push below pivot. So we're already down about 7 ticks in the 10-year. Bunds pretty locked sideways despite some slight movement through the day, but just touching session lows as I'm speaking at the moment. Okay guys, gonna wrap it up there. So enjoy the session and the day ahead, and I'll catch you in the chat room. Thank you.